Bring in Jan Kniffen. He's CEO of J. Rogers Kniffen Worldwide, and Steve Odland, CEO of the Conference Board and former Office Depot CEO. He's also a CNBC contributor. Steve, I'm going to start with you. Steve had an interesting line there in his piece about consumers having enough patio furniture and Pelotons for now. And I know that the Conference Board data shows that shoppers' plans to purchase big items have declined. But is that really less about the fact that we don't have the ability to do so and more about the fact that we already did that during the pandemic with those bigger ticket items?
Well, I think the stay-at-home kind of items like Peloton were, pandemic related. The issue now is that inflation has really eaten away all discretionary income. And for the American consumer, the inflation has been double-digit in food. And, of course, everybody knows the gas prices. And even though they receded a little bit here, they're still significantly above where they were a year ago and before that. So the American consumer is rattled right now, and they are ratcheting back. You see the high end doing very, very well, and then you see the low end. Interesting statistic, the fastest growing segment at Walmart, which is a barometer of the low end, are people making $100,000 and more. So people are actually trading down, even though they have discretionary money, to Walmart. And everybody in the middle is getting hurt. You see it with Kohl's and you see it with Target and others. And that's the state of the American consumer right now.
Yeah, that is exactly what CEO Doug McMillon at Walmart did tell me about the interesting parts of the higher income consumer shopping at Walmart and the growth that he's seen therein with food. You know, Jan, you have an interesting point in your notes as Steve talks about inflation hitting us hard. You actually think we might have seen the worst of it? What do you mean by that? And what are the data points that get you there?
Oh, I think we've seen the worst of inflation as far as retail goods, because I think the oversupply that we're hitting now is driving down prices. The supply chain is unkinking. We've seen that with everybody's reports. We know that shipping costs are falling, containers are available, spaces for containers are available. All of those things have peaked and started down. The problem we've got is that we may not have seen the peak in wage inflation, and we might not have seen the peak in consumer services inflation. But if you're talking about retail goods, which is what I follow, they peaked in the first quarter, and then inflation in that business is dropping. And if you talk about the consumer, they're struggling, but they did manage to put 8.9% on the bottom in July, according to the federal government, year over year. An 8.9% nominal increase in sales may only be flat units, but it's a consumer putting 9% more out of their pocketbook on the table. And that shows you the consumer so far is still pretty healthy. And we did see reports from Walmart, Target, HD, and Lowe's. That is the American consumer. How much do you have to know? And they told us all of those things were happening. They said trade down was happening, that the lower quintile consumer and the two bottom quintiles actually were struggling with the gas prices. But those upper three quintiles, their assets are still looking pretty good, and the stock market hasn't hurt them that much, and their home prices haven't fallen. That may all happen, but if it doesn't, that's going to be still a pretty healthy consumer through Christmas.
Steve, you used to run a retailer. If you were running one right now, looking at this environment and all the uncertainty ahead, what would you be doing? What would concern you most?
Yeah, so, I think the question is, where is inventory at this point in time? You have some people with inventory in good shape, particularly the low-end items. But if you have anything in the middle, you're hurting. We used to say back to school was August and September. You've got October for Halloween, and then you've got the holidays starting November 1st. I think the holidays this year start in September, as people start to have early sales, trying to clear this inventory and trying to get a head start here on the end of the year. Consumer confidence is down. Their confidence about the future is down, all driven by inflation. And even though we probably have hit a peak, it is still going to be quite high and all the way through next year. And then the Fed. So CEO confidence is impacted by the Fed. The CEOs believe that the Fed is not going to be able to engineer a soft landing, and it is going to drive a recession here in the fourth quarter and through into next year. As that happens and CEOs back off the labor investment, they back off hiring, they back off capital investment. All of this, of course, hits GDP, and there we are. So I think, it's going to be a dicey next 6 months.
Yeah, absolutely. And we did hear about companies like Wayfair announcing layoffs We know there's other issues there, though. Jan, before we let you go, I'm going to have you wrap it up and just talk just a little bit about the seasonality. I think it's important to dig into the details of some of these quarters, and that May and June were really hard. But in July, things did start to turn around a little bit. And maybe to your point, because we saw some peaking in some retail goods. So as we go here, is the worst behind us potentially in what the retailers had to deal with? A retailer like Target taking all of its medicine at once. Will the back half of the year maybe be a little bit better than some of these forecasts have been suggesting?
I actually think the back half is going to be better than the forecasts suggest, because unless we're going to see an enormous increase in unemployment, we're down to 3.5%. Even the bottom quartile's got a job, and their wages are rising, some of whom are rising actually as fast as inflation. And they will spend that. And the upper-end consumer has the money to spend. It'll only be if they're not confident enough, which we were just talking about. But those goods are being cleared pretty fast. And yes, we've still got inventory problems, but we're getting down to the point where we're having more normal inventory problems. We never thought we would be to the point of that period of time where we never had enough goods and we'll never have to take another markdown. That was just during the pandemic. Now we're coming back to where we've always been. You got too much goods, you're going to have markdowns. Some people don't, some people do. The upper end's in good shape. The middle is not such a good shape. But we are going to see strong spending at the back end unless something happens to this consumer. They've got the money. They've got the credit borrowing capacity. They've got a job. Right. And in my world, when I was running retail, if you had a job and you thought you were going to keep your job and you thought if you lost it, there was another job out there, you spent for Christmas.